Welcome back, everyone. Today we're going to be discussing how to make money trading Forex in the section of how do you trade Forex, right? So this is going to be continuing the beginners Forex trading course. For those of you guys who have not seen the earlier videos, go ahead and go back to the playlist on the channel so you guys can watch them in order. And again, these videos are going to model the curriculum on babypips.com, which is a free website for you guys to go through. And basically, it's a full course on Forex trading. It's the best place to start, in my opinion, for getting into the foreign exchange markets. But I know a lot of you guys don't want to necessarily have to read the entire course, so I wanted to put it in video format for you guys. But again, this curriculum, for the most part, is credited to babypips.com. So I will leave the links in the description to the different pages that we use in these videos in the description below. But before we get into today's video, for those of you guys who are new here, this channel focuses on comprehensive financial education for traders and investors. And for those of you guys who are looking to get started trading, go ahead and browse the description below for various resources provided to assist you in that process. One of which is our free Discord community, where we provide daily Forex trading signals absolutely for free. Again, Sunday through Thursday, and some days there won't be signals as I won't be taking a trade, but most days there will be an opportunity for you guys to jump in. And along with that, there is a growing community of people looking to get into the Forex market, various experience levels, so you guys can go ahead and ask people questions, network with other people, and just get a bunch of free resources as that community continues to grow. And again, that's free in the link in the description. So with that all out of the way, let's go ahead and get started with today's lesson. So how do you trade Forex? We're going to be continuing this section with how to make money trading Forex. So first off, in the Forex market, you buy or sell currencies. This is something we've obviously discussed already. So placing a trade in the Forex market is actually quite simple. The mechanics of a trade are very similar to those found in other markets like the stock market. So if you guys have experience in other markets, you'll most likely be able to pick it up pretty quickly. However, there are some differences in the actual execution of trades. So the objective of Forex trading is to exchange one currency for another in the expectation that the price will change. More specifically, that the currency you bought will increase in value compared to the one you sold. So an example of this would be you purchased 10,000 euros at the Euro USD exchange rate of $1.18. 2 weeks later, you exchange your 10,000 euros back into US dollars at the exchange rate of $1.25, and you are able to earn a profit of $700. So just a visual explanation of this, you can see right here, you bought 10,000 euros, and which was selling 11,800 US dollars. 2 weeks later, you exchange those euros back into US dollars, and you're able to get 12,500 US dollars back because the exchange rate went up. So you gain a profit of $700 in this case. So an exchange rate is simply the ratio of one currency valued against another currency. So an example of this is USD against CHF. Exchange rate indicates how many US dollars can purchase one Swiss franc, or how many Swiss francs you need to buy one US dollar. Now, I know this may sound confusing, but we're going to break it down for you real simply in a moment here. So how to actually read a Forex quote. Currencies are always quoted in pairs, such as GBP USD or USD JPY or USD CHF, as we just looked at. So the reason for that is that in every Forex transaction, and this is very important, you are simultaneously buying one currency and selling another. Okay, so you're exchanging your currency that you have for one that you would like to purchase. Okay, so the following is an exchange rate for the British pound versus the US dollar. So here's a visual explanation and something that you will see when you go onto a brokerage to actually trade. You can see here we have GBP USD, and the price is $1.51258. Okay, so basically there is a base currency in every single quote, and there is a quote currency. So the first currency will always be the base currency, and the second one will always be the quote currency. So the first listed currency to the left of the slash is known as the base currency, while the second one on the right is called the counter or quote currency. So when buying, the exchange rate tells you how much you have to pay in units of the quote currency to buy 1 unit of the base currency. Okay, so example, you have to pay $1.51 and some change US dollars to buy 1 British pound. So you have to pay $1.51 to just get 1 British pound. So you're always paying in the quote currency. That's how much you have to pay with the quote currency in order to get the base currency. Okay. And then when selling, the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. So in this example, you will receive $1.51 US dollars when you sell 1 British pound. Okay, so if you decided to short this, you would get $1.51 USD, and you would be selling or shorting the pound. So you're always basically focused on the first currency. That's the base currency. That's what you're deciding to go long or short on, and then you're quoting it in the quote currency. The base currency is the basis for the buy or the sell. So if you buy Euro USD, this simply means that you are buying the base currency and simultaneously selling the quote currency. So buy Euro, sell USD, or buy base, sell quote, or sell base, buy quote. Okay, so you just flip those, but you're always deciding for the most part based on the base currency. So an example of this would be you would buy the pair if you believe the base currency will appreciate, gain value relative to the quote currency, and you would sell the pair if you think the base currency will depreciate or lose value relative to the quote currency. So again, going back to that example, if you think the pound is going to go up in value against the dollar, so the price right now is $1.51, that's how much you get a pound in US dollars for. If you think it's going to jump up to $1.71, you would want to buy it. If you think it's going to drop to $1.31, you would want to short it. So continuing on, first and foremost, you should always determine whether you want to buy or sell. If you want to buy, you want the base currency to rise in value, and then you would sell it back at a higher price. In trader talk, this is called going long or taking a long position. And all you need to remember is that long equals buy. If you just want to sell, you want the base currency to fall in value, and then you would buy it back at a lower price. So this is called going short or taking a short position. And again, remember, shorting is equal to selling. All Forex quotes are quoted with 2 prices, which are the bid and the ask. And in general, the bid is lower than the ask price. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency, which means the bid is the best available price at which you, the trader, will sell to the market or go short. Okay, so if you want to sell something, the broker will buy it from you at the bid price. All Forex quotes, again, are quoted with 2 prices, as we just said, the bid and the ask, and the other one is going to be the ask price. Okay, so the ask is the price at which your broker will sell the base currency in exchange for the quote currency. This means the ask price is the best available price at which you will buy from the market or go long. If you want to buy something, the broker will sell or offer it to you at the ask price. So the difference between the bid and the spread, or the bid and the ask price, is known as the spread. So on the Euro USD quote to the right of us, the bid price is $1.34, and the ask price is $1.34.588. I'm not going to say the decimal points every single time, but you guys can get the point and see on the screen here. So if you want to sell Euro, you click sell, and you will sell euros at 1.34568 US dollars. Okay, so again, going back to that, what we just reviewed before, the price that you're actually buying or selling at is listed in the quote currency. So that's how much you would either sell or buy euros for in USD. So if you want to buy euros, you click buy, and you will buy euros at 1.34588. So again, just to review everything before we close this lesson out and move on to the next one, and this is definitely a lesson I would go over, and the link's in the description for the baby pips page, so you guys can jump over there. And again, that's free, guys. Something I definitely recommend. Review every single page we go over with these videos. So the links will be in the description. But I just want to review. We have Euro USD right there. So the first one is always going to be the base currency, and that is the basis for figuring out if you want to buy or sell. So the base currency, if you think it's going to appreciate in value against the quote currency or the counter currency, you would buy. If you think it's going to go down, you would want to sell, okay? And then the prices right there, we have the bid and the ask price. The bid, basically, I know it was a little bit confusing, the technical definition, but the bid, for example, if you want to sell, that's the best price you're going to be able to sell at, right at the market price. And if you want to buy, the ask price is going to be the best possible price that you can buy at. Okay, so pips are going to be the last decimal point or the last number in every single price on the bid and the ask. Pips are going to be something we're going to go over a little bit later. And then finally, at the bottom here, we have the spread. So 1.1053 minus 1.1051, which is basically the ask price minus the bid price. That's going to equal the spread, which is going to be 2 pips. Okay, so that's something we'll get into a little bit later when we discuss pips in a couple lessons. But again, guys, I just want you guys to remember these specific lessons: base currency, counter currency or quote currency, bid and the ask. And then we'll discuss pips in a few moments here. But you guys need to understand what a base currency is and what the quote currency or counter currency is in order for you guys to actually understand what you're even buying or selling and what you're actually betting on happening and what you're speculating on is going to happen in the market with the specific pair that you're trading. So make sure you guys review this lesson. Go over to the babypips.com page for this specific lesson. And make sure to review this and take notes before you guys move on, because this is a very fundamental aspect of Forex, and it's really what you're going to see for the most part on your brokerage when you go in and trade. This is what you're going to be met with, and this is what you need to know in order to be able to trade consistently and profitably, or else you're just going to be buying and selling things that you don't really know what's going on, and you don't know the fundamentals of how it's actually going through, how the transactions are going. So you guys need to make sure that you get these fundamentals down before you move on to some of the next lessons. So hope you guys enjoy this one, and I will see you guys in the next lesson.